So if you're not speaking, you can go ahead and mute your lines, but I'm going to go ahead and share my screen. And you guys should be able to see my screen now. Great.
Yes, sir.
All right, great. So thank you everybody for joining this evening's Wealth Mindset and Real Estate Investing virtual meetup. My name is Chris Price. I am the host of Wealth Mindset and Real Estate Investing Meetup, and I'm also the CEO and co-founder of Red Fox Multifamily. And let me give you a little bit of information about the sponsors before we get into this. So in terms of wealth mindset and real estate investing, the wealth mindset and real estate investing meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living. They and they have discretionary income to invest in real estate for its proven wealth building power, don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing, as well as other proven ways to build wealth through real estate through passive investments. And as it relates to Red Fox Multifamily works with investors who are dissatisfied with the low returns from savings accounts and bonds, and investors who are concerned about the volatility of the stock market. Red Fox Multifamily puts discerning investors' capital to work for them by investing in exceptional multifamily properties in the best markets nationwide. Demand for multifamily rental units continues to grow and is driven by both the preference of certain demographics, as well as unaffordable single family home ownership options. We're based in White Plains, New York, and we partner with investors whom the stability of the real estate investment appeals, but the stress of property ownership does not. We give investors benefits of real estate investment through syndication, which, as we all know, is a group investment, in our case, in multifamily projects. So without further, let me go ahead and just read through a few of the logistics for this evening. Please mute your lines when you're not speaking so that we can limit any of the disruptions to our guest speaker. I want to ask everyone if you could, in fact, I know speaking with Trevor just earlier, he prefers engagement. So if you, while it says hold your questions to the end, if you would like to ask questions along the way, please do ask them. Um, as I mentioned, this presentation is being recorded, so please take note of that. This material does not constitute an offer or a solicitation to purchase security. And then finally, this is information only and should not be construed as business, financial, or legal advice. And so, for those of you who are interested in connecting with me, and we may not be connected already, you can scan the QR code, or you can email me at chris@redfoxmultifamily.com. I'm on all social media for the most part, with the exception of TikTok. I'm holding out on TikTok for now, but I'm on. You can find me, and we can connect and just get to know each other more, especially if you're interested in learning more about wealth mindset in real estate investing. I'm happy to connect and talk more. It's my passion. And so for our agenda today, I'm going to just take a moment to introduce our speaker tonight. And I'm going to also I'll turn it over to Trevor to be able to provide the speaker presentation, and he'll share with you all. We'll go through a Q&A, and then we'll do some virtual networking if time permits a little bit later. So without further, let me go ahead and introduce our guest speaker this evening. So Trevor Thompson, his goal is to help 1,000 people reach financial independence through real estate investments. Trevor Thompson has spent the past 45 years working as a vice president, um, opening and operating attractive attraction type businesses. the last 20 years with iFLY, Indoor Skydiving, where he's opened 46 of 80 worldwide locations. And I have to just take a brief pause here because my family loves the iFLY experience. We have one in the New York area where I live, and it's just a fun time. If anyone wants the experience of skydiving without having to jump out of an actual plane, I highly recommend it. It was a lot of fun, and a lot of great laughs, a lot of great video footage, and a whole host of things going on. So Trevor, thank you for that. My family and I, we have had an amazing experience with that. um, I'd also like to share, for over the past few years, um, he has become passionate about learning about real estate investing. His goal, as I mentioned earlier, is to help 1,000 people to reach financial independence through real estate investing. He is an avid learner, continually connecting with like-minded people. He's now an active sponsor and is very excited to be partnering with Massive Capital as the VP of Investor Engagement. In this position, he is working to create a community for their investors where they educate, inspire, and create a place for investors to feel part of an investor-friendly network. And I just one more thing before I hand it over to Trevor to speak this evening. Just I had an opportunity to meet Trevor at a conference in person, but we've spoken on a couple of occasions virtually, but then finally had a chance to meet at Raise Fest. Just a gentleman, really just well connected, well known. You're Trevor. I think at this point you're pretty pervasive in my world, whether it's on LinkedIn or Instagram or just an email through the campaigns that you guys have about all the awesome properties that you have from all the great work that you're doing. I'm very grateful for you to take the time out to speak with us and our membership here this evening so that we can learn about your investment careers thus far and all the great things that you're doing. So without further, let me stop sharing my screen and then I'll hand it over to you to talk to everyone tonight.
Awesome. Well, I'm super excited to be here. I am not a make a presentation kind of guy. So as Chris mentioned, I love talking with people. I love interaction. I love telling my story, my why, all the different things. So it's an honor to be here with the group. I am
And
based.
Trevor, just to
Yeah.
let you know, your video is not sharing. If you meant it to be that way,
Uh-oh, I
please go
did not.
ahead.
Hold on.
Yeah,
I am so sorry.
there
Am
we
I
go.
on now?
You were for a second, but there you go. There you are. We got you
You
now.
got me? Sorry.
Yep, no problem.
Man, I was giving good looks at you the whole time you were talking and nobody knows it. Sorry about that. Thank you. So my name is Trevor. The K is for my legal name of Keith. I was never called Keith. When I turned 16, I had documents that said Trevor, documents that said Keith, and I worked for a guy that used his first initial and thought, that's cool. So I've been K. Trevor Thompson for quite a while now. So I wanted to talk a little bit about tonight about kind of how I got to where I am. I was always interested in real estate, but I was terrified of toilets, tenants, and trash. Like so many people, I was afraid of it. I didn't even like to call a repairman to come and fix anything at my house. And I knew better. I knew that I should be involved in real estate, but I just didn't do anything. And so while I was fascinated with it, I didn't do anything. I was frozen in time. And I continued to do what so many of us do, which is trade time for money, right? I worked really hard. I had a great career. I mean, I was working 80 hours a week. I was traveling a ton. My record is 240 days in a year on the road traveling. And so it was just like, I wasn't doing anything, but I always kind of knew I should. And then about 25 years ago, somebody gave me a copy of Rich Dad, Poor Dad. And I went, okay, I kind of understand this now. The guy's saying that my house is a liability and not all debt is bad debt. But again, I went back to excuses. no time, no money, no time, no money, no time, no money. And I stopped, I didn't do it. And so one of the things that's on my mission, and when I talk about having 1,000 people reach financial freedom through real estate investing, I want to make sure that I'm clear. That's not necessarily investing in real estate through me. It's I want to have people learn what my thick head took till I was almost 57 years old to actually learn, which was the power of passive investing and the power of your money working for you. So Warren Buffett very famously said, if you don't make money in your sleep, you will work until you die. Okay, and that's a very powerful statement that people really need to get through their thick skulls. And again, it took me a long time to get it through my thick skull. And then what happened was iFLY Indoor Skydiving did get bought out by a private equity company. So all of a sudden, I had some money. I still had no time, but I had some money. So I said, okay, I have, and I paid a ton of income taxes. And I always thought to myself, okay, well, real estate helps with taxes. I'm not quite sure how yet. I need to make a commitment that I'm going to learn about real estate investing. So initially, I was actually interested in office buildings and stuff. And I went to one of those weekend webinars where they super high pressure to get my credit card limit up to 50,000 so I could buy their course. And they were going to teach me how to buy office buildings with no money down. I don't know if anybody's ever been to one of those. And I went, wow, this doesn't quite sound right. And then I went to a couple of other ones. And then I actually went to one, and it was all about syndication of multifamily. And the whole thing, all the pieces kind of came together. So in my career, we bought some of the franchise locations back, and we did the exact same thing. We bought businesses, we put systems, processes, added some capital, put some new management in place, improved the operations, and then we had a value. So when we sold to iFLY, it was a multiple of our EBITDA, which is the same as NOI in apartments. And so we got and so I understood it. And it was like, boom, this thick head opened up, and I went, I get it now. So I'm actually going to give somebody with experience my money. And again, I met them in person. I went to several of their meetings. I'm going to give this person that I've become to know, like, and trust my money. They're experienced and they know what they're doing. They've done this a few times before. And then I'm going to give them my money. They're going to combine that with bank debt, which kind of put the brain back on of Robert Kiyosaki's and the power of good debt and the power of leverage. And, because so many people today, right, they teach you leverage is bad, debt is bad, all of these things. And so the power of that. So I'm going to give them my money. They're responsible for everything. I'm not responsible for anything. My only risk is the money that I'm putting into the deal. And then they're going to buy an apartment complex. And not only are they going to buy it, they're going to make it a better place to live for the people that live there. And they told stories and they showed pictures of their customer appreciation barbecues and buying backpack for kids for back to school. And one of the apartments had an after school program for people with English as a second language, because they had a lot of people that were immigrants and their kids, and they weren't learning English quick enough to be able to keep up in school. And again, all of these things were like a light bulb coming on in my brain. And then, so once I did my first investment, I quickly did my second investment. To date, I have invested in syndications 21 times, and I'm actually now on the active side as a general partner on my sixth deal. So again, I went from, and this isn't about a 5-year period. So clearly I was motivated. I was in it. Now it's easy to be a passive investor if you have money. It's really easy. So because you just take your money and you put it in a deal. There's no shortage of deals. I'm getting emails from Chris. I know he's got a deal. Looks like a good deal, by the way, Chris. But right now everything's engaged in. So you give your money to somebody who has experience, and then they buy a place and they make it better. Then you get a little bit of cash flow. You get some great tax advantages through depreciation and passive loss and all these other things. And then they sell the property and you get a big payment back when they sell the property. And this all just started like really enlightening me. Now, I did do a couple of other things that some people haven't done, is I'm diversified a little bit. While multifamily is my main investment vehicle, and I love multifamily, and the reason I love multifamily is even in the Stone Age, people lived in caves. Okay, they had to have a place to live. So even in the Stone Age, nobody just slept out in the thing, right? They found caves, they made caves, they started making houses. So from the beginning of time, in theory, people have had needed places to live. And then, so this is just something that makes it like so much better because there's this big need for it. We all know there's a housing crisis in America where, you know, we just don't have enough housing for people. There's lots of other things. So I have actually also invested in retail. I have great timing on retail. We bought a strip center and closed March 15th, 2020. And we all know what happened about 2 weeks later. It's actually hanging in there. We're starting to get some good improvement, managed to switch out a couple of tenants. And then I also invested in an apartment to condo conversion in Austin. Big thing here, taking places and turning them into condominiums. I've invested in a single family home fund. I also during COVID invested in a medical center. So where that medical center is a very interesting asset to invest in. And then I've also invested in a new build storage in Charlotte, North Carolina. So while most of my investments are in Texas, I do have an investment in Arizona. I have an investment in North Carolina, South Carolina, and Georgia. Now, for me, where they are very important. I like to put my money in pro-landlord, pro-business states that a lot of people are moving to. Now, the states that I mentioned, a lot of people are moving there. They're doing really well. And so it's a really important thing for me when I did it. So again, I'm diversified in where I've been, and I've had everything from, I had one deal that we actually lost our passive investment. So most people won't tell you that, but it happened, very rare. It was something that could have been avoided, and I've tripled my money in 20 months. So, but on average, my deals have produced about what everybody recommended that they would produce, which is to double your money in a 5-year period. A couple of them did it quicker just because the market went crazy. So one other thing I really like to talk about is on real estate investing, time is your friend. Real estate investing is not a get rich quick deal. Okay, it is the appreciation of time. It's the good tax benefits that allow you. So again, it's not what you earn, it's what you keep, right? If you earn a bunch of money and you pay it all in taxes, it's not so great. And so I want to give one little example. Okay, if I had started when I was Chris's age, okay, he's a much younger man than I am. So just think of this. I got a $100,000 bonus somehow at work and I invested that. 5 years later, this $100,000 turned into $200,000. 5 years later, I reinvested everything. It turned into $400,000. I reinvested it. It turned into $800,000. I reinvested it and it turned into $1.6 million. I reinvested and it turned into $3.2 million. How many of you from one investment would think 30 years later, I could have $3.2 million in the bank? It's pretty powerful, super powerful. And Chris and I were talking earlier about, you know, a lot of people want to, oh, I want to leave my job. I want to make enough money to leave my job. And I'm actually a bit of a contrarian. I say, don't leave your job until you've got so much money you don't know what to do with it. Because if you continue to live off of the passive income that you make, you're not going to, that 100,000 is not going to turn into $3.2 million. It's going to be 100,000. You're going to live off 20 a year, 30 a year, and then you're going to at the end of 30 years, what are you going to have? You had your life. You did pay your expenses, yes, but you have $100,000 left versus $3.2 million left. And that's financial freedom, right? To the point where this is producing so much money for you that it's just life altering, right? You can do whatever you want at that point. And of course, my story is only making one investment. Imagine if you made several and you were really focused on this. So for me, my message is, if you don't make money in your sleep, you will work till you die. Best time to don't wait to buy real estate and wait. So those are kind of my two messages. I'm not, I rambled a little bit, but I'm not sure if anybody has any questions, if I said anything that made you think.
Yeah, so thank you for that. Leslie, please go ahead. I see you have your hand up. Please take yourself off of mute.
I just wanted to ask a quick question about the syndications. Do you have to be an accredited investor to participate?
You do not. So there are two types of investments that can happen. One is called a 506B, and you can be a sophisticated or an accredited investor to invest in it. The big difference is you have to have a relationship with me before I can offer it to you. So the government says I can't solicit it. So tonight, if I had a 506B deal and I talked about it, I would have broke the rules. I would have broke the law. I cannot talk to it. Now I can have a relationship with you. We can set up a call after this call. And then when I have a deal coming up, then I can offer you that deal. So, and then there's a deal called a 506C. You have to be accredited, and I can send it to everybody. I can post it on Facebook. I can do all kinds of things, and you have to be accredited. So a little bit more description is sophisticated too. And if people are trying to get you on deals and you don't understand real estate investing at all, sophisticated means you at least have a general knowledge of the risks that are involved with real estate investing. Okay, because you need to be educated first. What is real estate investing? What are my risks? What constitute a good deal? You want to do investing with people that you know, like, and trust. Okay, so if you're coming to Chris's call and you're going to spend some time with him, he's providing value, education. He's done things. He's all these things. So you get this affiliation saying, okay, because that's the most important thing after you're educated, is who you give your money to is the most important thing. Okay, so I call that the jockey. The jockey wins the race. Okay, and then the horse is an asset class, whatever it is, and then the track is your location, the way I look at it. But number one, bet on the jockey, right? Bet on the sponsor, and make sure that you understand who they are and that your goals are aligned, right? And that this is somebody that you want to be in business with. I kind of call it like dating, right? We're going to have a 5-year relationship, and I want to know that you're going to respect me, take care of me, put my money first. How hard do we work to get $50,000 or $100,000 after tax dollars to invest? We work very hard, okay? And sometimes it takes years of really sacrificing to get there. You want to give your money to somebody that appreciates that and that treats it better than their own money even.
Great question, Leslie. And Trevor, thanks for hitting on that point about the sponsor. I think that is such a critical part to this whole thing, and being able to invest with people that have experience, that know how to navigate through things, and the team that they have assembled to ensure your investment is successful is one of the most important things also. So thank you for touching on that point.
Yeah, it's really important.
Other questions or comments?
Good to see you, Chris. The other Chris, by the way. We got two Chris's here.
Oh, yeah.
It's interesting, you meet all these people in Zoom. I got a funny story. So nothing but Zoom. I met a whole pile of people. and there's two partners, and I met them at a Jake and Gino conference in Orlando. And one guy was 6'6", and his partner was 5'4". And I remember walking up to them going, you look a lot shorter on Zoom and you look a lot taller on Zoom, because it's kind of funny when you see somebody in person. It's like, ooh, you know, and it's just really funny. Yeah, and then one of the ladies that works with me in Massive, she was actually in Phoenix and met one of our partners, and he's 6'8". And she's not very tall, and they took a picture, and she looks like, you know, so small. It's kind of funny.
That's incredible. It makes me think about that movie with back in the '80s with Arnold Schwarzenegger and I think it was Danny DeVito. Yeah,
that's a good movie.
That was a good movie. That's
Kindergarten Cop.
hysterical. Yep, exactly. So any other questions for Trevor before I jump into some questions for him as well? Well, Trevor, I'll throw out a couple questions for you, because I think you know, that might help some folks sort of get along. So you talked a little bit about, you know, market and you know, landlord friendly, business friendly. You know, you talked about the variety of different assets that you're investing in, but maybe can you expand a little bit more on the market selection, because there's so much that goes into that in terms of where people might focus, and you know, folks may not be really savvy on those things, or they may hear things in mainstream media. For me, for example, I think about you know, Phoenix, Arizona, for example. A lot of talk about the Arizona market, but a lot of talk about water issues. I know Chris and I actually talked about that not too long ago. I think about Florida, and you know, some folks are like, oh, a little wary about Florida because of natural disasters and the hurricanes and all those things. So you know, all that stuff. But maybe you can talk a little bit more about what goes into it for you in terms of your market selection.
Yeah, so first of all, let's go really big picture. Okay, so pro-business, landlord-friendly state that people are moving to. That's really big picture. Yeah, okay, so Texas, let's say Texas, okay, really big picture. But Texas is huge. For those of you that don't know, it takes 24 hours to drive across Texas. Think about that. 24 hours to drive across Texas. It's a big state. So you have to understand things. So then when you get into your market and you start going down, I happen to live in Austin, and we're in what's called the Texas Triangle, which is Houston, San Antonio, Dallas. Man, this place is on fire. Okay. And so many people are coming here, and tons of jobs are coming here. So that creates this microcosm, right? Doesn't mean that Lubbock's not a good market. Doesn't mean that down by Mexico is a good market. I tend to stay away from the Gulf markets. So ones that are too close to the Gulf. Just personally, that's me. I tend to stay away from small towns that don't have, you know, it's just really hard, like, to have a migration of people coming into a town and different things. And so, you know, it just makes it very unique to do that. But I want to make sure that I'm clear. What's most important is that you feel comfortable about a market, and your team that you're investing with has experience in that market, has boots in the ground, has the local knowledge. Okay, I would never invest in California. I'm partners with some folks in a deal in Columbia, South Carolina, and they just closed their second deal in California. And I think, are you crazy? And they reported they've had it, and they're killing it because they know that market. They live there. They understand. They know where it is. They know the laws, the rules. So again, when there's big blanket rules and laws, it doesn't mean that that market is bad. It just means that you need to understand that market. You need to understand more about it. And more importantly, your sponsors need to understand that market. And I always want to know who lives in that market, right? You know, what experience do you have in that market?
So, and then another question that comes to mind that I think would be helpful for those who are learning and growing here is, you know, maybe giving some insight into some of the important metrics that you know. So you've taken this time, you've selected your jockey,
Yeah.
You've selected the market that you want to focus on, and then now you're in a deal, or you're analyzing some deals, and deals are coming to you. What are some of the important metrics and measurements in terms when you are looking at deals, or as a passive or an active investor, to be able to, and it doesn't have to be the whole thing, of course, but just what are some things that really strike out to you that you want to know the story behind the numbers? Is it cash on cash? Is it the equity multiple? What are you looking at there?
So important things that you need to understand. First of all, I talked big market picture. Okay, I live in Austin. There's bad places to put money in Austin and invest, okay? People live on the wrong side of the tracks. You got to be careful. You got to be what you're doing. So I tend to look at two things when I want to. So first of all, big picture, right? We talked a lot about that. And small picture is what is the income of that neighborhood? Because you're only going to attract about a 3-mile radius. What are the existing rents around it? So during the craziness when everybody was talking about we're going to put rents up 40% and all these things. So if you got to make at least 3 times the rent, right? So if you want to charge $1,000 rent, people need to make $3,000 a month in income. And so you do a quick look in the area. I was going to invest in a deal and I thought, oh, this is great. And then I did a little quick search on the internet and I'm like, people they're only making $2,500 a month in this market. How are you going to get the rents to there, right? So you do those types of studies. You also want to look for what is the neighborhood. You can fix the apartment complex, but you are not able to fix the neighborhood. Now, neighborhoods are gentrifying, things are doing, but again, if I'm saying I'm going to buy a place and I'm going to make it better and safer, but I looked at apartment for some friends of mine here in Austin. They're like, oh, this is, and I said, man, you're driving through a D-class neighborhood, you're in the ghetto, going to the nicest building in the block. By the time the block gentrifies, they're only going to be as nice as your apartment complex. There's no room to go up, right? So it's like you want to be in a good neighborhood with a property that you can add some value to the neighborhood. And now all of a sudden people are going to want to come there because it's a good neighborhood. So those are the kind of things that are really important for you to look at. You know, unit mixes and different things. I looked at apartments today and I'm going to go see them on Saturday. They got 70 units that are 380 square feet. And many markets, that would be a bad move. But this market, it's all single working people. You know, it's in an area where there's just a lot of single working people, couple working. So they're okay living in a 380 square foot apartment in Austin because that's all they can afford. But you wouldn't want to go into a family market and say, I'm right across the street from this school. Well, where are you going to put the kids in 380 square feet? They're going to be sleeping in the bathtub, you know? So those are the kind of things you want to look at when you start looking at a property and a project.
Awesome. No, thank you for that. And then I had another question just to help color the picture for our investors that are, that are maybe interested in learning more about these things. Of course, there are multiple different strategies as it relates to this asset class of multifamily investing. We talk about, there's one of the most particular ones and the one that I focus on, and I know many of us on the line focus on as well, is that strategy of value add.
Mm-hmm.
Can you maybe talk a little bit about the value add strategy and why? And I know you've invested across many different types.
Yeah.
We even talked a little bit before around ground up development and those types of things. And there are many different ways that people can get involved in investing in these types of assets. But maybe you can talk a little bit about the different strategies that you
Yeah.
focus on, and in particular value add.
Yeah, so value add, obviously, what that really means is we have a business plan. We're going to take an underperforming property, underperforming asset. We're going to spend some money, some time, and some energy, and we think we can make it a better performing asset. And then it's going to sell for a multiple of how much better we make it, right? So it is a really good plan, and it works a lot of the time, okay? But it's also one of the more riskier plans. But it's one of the It's like, it's what most people are doing, most people are investing in. But what I like to talk about is when, again, once you start investing in lots of different things, you want to diversify too, and a little bit about what you invest in. So I invest in multifamily. The majority are what I'm going to call value add. Okay. And I call those, you're going to hit a triple or a double. Okay. Those are the ones that, 20, they did 3x my money in 20 months. That's grand slam, right? That's bases loaded and I got a home run. Okay. And then my medical center, for example, it's only a 10% pref with no upside. That's a single. And so, but what I look at when I'm trying to invest is if you only go for home runs, what are the chances of you hitting a home run every time you go up to bat? Right? So you want to get a little bit of mixture. So maybe a B class or a low, older A class property is a little bit safer of a bet because it's not that big of a lift. We're not like tearing apartments down to the studs and putting them out. We're not kicking the gangbangers out and the drug dealers. So there's a variety of different things. What I tell people is try to look at and have some balance in your plan. So again, I've done everything from land entitlement to new build to bought an existing A plus from a developer to, deep value add. So they're all different and they all have different risks and rewards. But I like to tell people to try to balance things out a little bit so that there is some diversity in your investments. And again, I did all of my investments at the beginning in Texas because I live in Texas. So Texas happened to check all my big boxes. But I wanted to get a little diversification. So that's why I'm in the Carolinas, Arizona, and now Georgia.
Awesome, thank you. Does anyone else have any questions? Of course, this is a platform for all of you. I don't want to hijack the meeting. I want to give everyone a chance to ask questions if they have them. Otherwise, I'll go into the end session of our meetup here and ask Trevor some other questions that we ask all of our guests. So I'll give it another beat here, and if you have questions, please take yourself off of mute, or you feel free to type it in the chat. You can do that as well, and I'll read it out. Go ahead, Leslie.
Hi again.
I
What kind of tools are you using to analyze the markets that you're considering?
Yeah, so there's a website called City Data. There's also another one, Crime. Boy, I'm drawing a blank now. I should remember them.
Lexus.
Justice League, Justed Map. That's it. Yeah. So
And
some of
Nexus
those types of things. Also, just go to apartments.com and look at rents in the area. What are rent, and try to look at the property and go, is this property, from what I can tell, again, it's hard. I try to drive everything before I invest in it, if at all possible. And I say, okay, they said they're going to increase the rents to the property. And by the way, you can drive everywhere in Google Earth. I drove all around Tucson, Arizona before I invested there. I think I've been there in my dreams, because I drove all around. But does this apartment complex look better than? They've said they're going to get rents up to this apartment. Is it possible, right? Because again, you can only put so much lipstick on a pig, right? I mean, if it's a really rough property, you can only go so far. And if there's a really nice place across the street, the chances of achieving those rents are very challenging. I also like to look at people that aren't trying to achieve the top of the rental market. So if average rents in the area, when you start looking at apartments in that zip code, they're all 1,200, and these guys have told you I'm going to get to 1,500. That's a red flag to me, right? But if the average rents are 1,200 and they told me we're going to get to 1,100, I think, oh, this is a realistic, reasonable plan. So those are the kind of things you do on your due diligence. And again, it takes a little bit of time to get there, but you'll learn over time. And that's why you just need to get educated, like coming to Chris's events and listening to podcasts and going online.
No, great stuff. No, the information is definitely available to you. And what to piggyback on what Trevor's talking about, you're going to in this when you have deals coming to you, you're going to see many different deals, and they're gonna show you, of course, the teams that you are investing with. They do a ton of research to make sure that what they're projecting is going to come to a reality. But of course, doing your own due diligence and just saying, hey, is that aggressive what they're proposing, or is that consistent with what it is we believe might come. Like those things are definitely really important to do. I want to go back, Trevor, just really quickly. There was a question in the chat about the different sites. You mentioned city data. There was something in between city data and apartment.
Justice Map, that there's Crime Watch, there's several sites.
I hope we answered that for Charlene, um, and you can give us a shout in the chat if we did. All right. Well, I am going to thank you, Charlene. Thank you. I'm going to transition now just to the last segment, and what we do here is we ask all of our guest speakers on the wealth mindset and real estate investing meetup a few key questions just to help people get to know you a little bit more beyond what you've already shared. So Trevor, one of the things that I like to ask people, I'm a big traveler. I love traveling. I love just seeing new sites, taking in different things that this world has to offer. And one of the things that I like to ask folks is, what is one of the best trips that you have taken and why?
So Sedona, Arizona, because man, it's gorgeous. It is just like all them colors I love Southwest, and that whole thing, and man, those colors, and it's just amazing. And then on a work trip, Brisbane, Australia was mind-boggling. I loved it.
Wow.
It was gorgeous, and their coffee tastes really good. I don't know what it was, but man, their coffee was good.
All right, now I have to figure out where I can get some Australian coffee, and I can certainly attest to Sedona, Arizona, and the Red Rocks out there, and we did the pink Jeep tours out that way. It was just really the topography in this country is
Yeah.
is amazing. So no, that's a really good one. So you mentioned you're a part of Massive Capital, a lot of great things going on. What types of things do you guys have going on right now that people might be interested in learning more about, and they can reach out to you? What are some of the things that you're working on these days?
Yes, so we're doing a deal right now in Fort Worth, Texas. We actually closed today, but we're still finishing our raise. We've still got a few spots left. And that, interestingly enough, that deal started as a 506B, and we switched it to a 506C, the first time I've ever been involved in that. In fact, we have a deal we're launching next week that we're planning to do it. We didn't plan to do it. We just struggled to raise money. Chris, we were talking before the show started, and it's a tough time right now. And then we have a really cool new deal, and it's really hard to describe, but connect with me on social media. I post stuff, but it's called X Space. Okay, and what this is this is not grandma's storage unit. This is a combination of high-end industrial, workspace, storage space. I mean, but really high-end. Okay, so like you're going to buy a condo unit in there, and it comes unfinished, and you're going to spend about $350,000 to buy a small little concrete box that you renovate out. But again, it's for high-end business people, very eclectic kind of place. There's a guy here in Austin, and his unit has 6 of his Porsches stored here because they're too expensive to buy storage in California. I don't know quite what you would do with 6 Porsches, but it's a very interesting concept. And when I talk too a little bit about diversification, so this is a diversified deal. This is about a 2 to 2.5 year deal, right? So you're getting good momentum on your money. Some of the things that are in multifamily aren't here. There's no depreciation, there's no other things, but it's a much higher return on your money on a short period of time. But it's a unique one. It's also, I can talk about it here because it's for accredited investors only. But we have a lot of deals, and I can refer to ourselves as opportunistic sponsors. So we partner with people. So Fort Worth was a partnership deal. Our deal in Georgia, we're actually backfilling somebody else's deal we joined. They did 2 deals in a row and just struggled to get closed. So we helped them close, and we are backfilling it now.
Awesome. Thanks for sharing that. And then another really important one here, and financial freedom. You actually talked about it, and you talked a little bit about actually what it meant to you. But I think it's worth repeating. What does financial freedom mean to you?
Yeah, so it means that I can do what I want to do when I do it. I don't have to do anything. Love what I'm doing. I hope it shows. Hope I love what I'm doing, but I don't want to have to do it. I'm not quite financially free yet, but I want to be able to do what I want to do. To me, that's financial freedom. So again, you could say, I want to lay on the beach and drink pina coladas. I want to send my kids to college. I want my children to inherit, generational wealth. It's different to everybody, but it's the fact that you no longer have to trade your time for money. You are free from doing that. You can still trade your time for money, but you don't have to. That's the difference.
That is great. Thank you for sharing that. And I have to say that I subscribe to that same mindset. The last question that I have in terms of mindset is, of course, the name of the meetup is wealth mindset and real estate investing. What does having a wealth mindset mean to you?
Yeah. So, you know, Jim Rohn said that if you give people what they want, sorry, if you give people what they need, you will get what you want. Okay, so wealth mindset is giving to people. Another great book, I love books, read The Go-Giver by Robert Burke, and he is a co-author. Amazing book. And I put my link tree in the chat there, but if on there, I have a bunch of books I recommend, and there's different things, but it's an amazing book. So to me, it's again, my goal to help 1,000 people create financial independence. And I'm not saying invest with me. And I'm not saying I'm like Mother Teresa either, right? I'm working hard. I'm doing stuff. I'm raising money. But again, I just want to get that message out there because I waited too long.
Awesome, Trevor. Thank you so much for sharing and for just providing so much value to the listeners tonight. It is greatly appreciated. I learned a lot. I'm sure many others did as well. What I'm going to do now is just wrap it up and say, first, if people want to get in contact with you, I see that you posted your link tree there, but how can people that are watching this on the recording, or even
So,
for those who are here today, how can they get in contact with you?
so LinkedIn is the best. You got to remember the K Trevor Thompson. Just say how you were on Chris's meetup, and I'm much easier to accept people there. Facebook, I'm almost at my limit. So LinkedIn, they don't give me a limit.
All right. Well, thank you for that. And again, thank you for all of you for joining this evening. What I'm going to do now, I'll end the recording, and if for those of you who want to do a little virtual networking, we'll let that go for a few minutes, and then we'll wrap it up. But thank you all for joining, Trevor. Thank you for being such a great guest, and have a great evening. Good night.
Awesome. Thank you so much.